Hi everyone, my name is Ahmad, and today we have a special guest in our podcast. Welcome, Mark. Nice to have you here.
Thanks for having me, Ahmad.
Thank you. And can we start with who you are and give us an intro of Sarwa?
Yeah, of course. So my name is Mark Chahwan. I'm the co-founder and CEO of Sarwa, which means wealth in Arabic or fortune. We're the first fintech to be licensed in the MENA region. We started as an automated investment platform where we help people um, invest in a diversified portfolio, so making it very easy and accessible for young people and retail investors to invest. And we also now more recently added additional products like self-directed trading and a high yield saving solution. So it's really a one-stop shop for people to invest. And I started this with two of my good friends, Jad and Nadine, who I've known for a very long time. Um, and yeah, originally Lebanese, grew up in Canada. I studied at McGill University in finance, and after working a bit at Accenture in management consulting, decided to embark on this journey of building Sarwa.
So, super interesting. How did you, I'm sure you saw the opportunity, but how did you say, I'm the guy, I'm the person that needs to do this?
It took some time to do research around what is kind of the existing landscape in the Middle East. What's a safe place to build a business out of, and where there's a lot of expats as well. A place I can relate to, and Dubai and the UAE specifically stood out as a hub. And then it moved into understanding the landscape. I quickly realized that the banks fell short in terms of client experience, and you needed kind of that combination of skill set between simple design, technology and modern technology, and finance. And I felt like this is a background, this is a something I had that reflected kind of my own journey and that of my co-founders as well. So it's much more about, a mix of looking at what's out there as what the world needs, and playing to my background and looking inward on my interests and skill set.
For sure. And how did you know, or what was the biggest hurdle in starting up in the MENA region? What was that you saw the opportunity, but then and you said you played to your skill set, but what was it not met with, or what was their biggest challenge?
I think the biggest challenge is mainly initially that mental block to where your mind is telling you this is too crazy to go and launch a financial institution in a place where we hadn't lived in before. We were in Montreal at the time, so we didn't really know who to talk to, how to approach getting a license, how much money we would need to raise, and or get started. So it just felt like this very intimidating mission to start a financial company. And we got lucky because it aligned with where the country wanted to encourage fintechs to have a sandbox where they can, instead of like let's say a $500,000 capital requirement, they dropped it to $10,000. So they started to also this kind of intimidating start factor was met with a desire for them to innovate and lower that barrier to entry and encourage founders to move to the UAE and build businesses from there. So that was probably one of the biggest hurdles initially. That once we were past it, I think actually we were quite recognized as a pioneer in getting it started, and then things started to roll, and we were able to raise capital, attract really great people to work with us, and one milestone after another.
Sure. Super interesting. I didn't know that it was, you hadn't lived in the UAE, so it was like a completely different
Yeah.
experience. And they're definitely promoting to become a hub in the region. What about scaling and cultural fit? Because as you're saying, you were maybe there wasn't a supply side, or banks were falling short. Was where Was there appetite culturally?
Yes, there was. I would say with some, the UAE is very multicultural and diverse, so there were some more appetite from some nationalities. For example, Europeans, Canadians, Indians, I would say either had a platform, they were kind of looking for something like this already, and it was an unmet need, or they have an investment or saving culture that's quite ingrained in how they do things. The initially, I would say, whether it's the Levant or GCC, Arabs maybe a bit less so. We had to do a bit more push and more events and more awareness. But that caught up. I think today where there's no, we see a very um, fair representation of the country when we look at our demographic, especially after COVID. I think there was such a big boom in investing as and becoming much more mainstream, that unlocked like a lot of content, a lot more interest in investing, whether it's in trading or long-term value investing.
Yeah, yeah, super interesting, and I say this because I see I am Middle Eastern as well, so I know the culturally we're very brick oriented. We love to invest in real estate or land, or that's sort of like our
Yeah,
grandfather did it, so that's how we do it. And changing mindsets takes a long time, but like you were
yeah,
mentioning, perhaps the cultural of other people saying, "Hey, you can do more," has rubbed off into positive. Uh, I
that's
guess
right.
for you to be more exposed to other sectors. Do you see like an appetite more for traditional? Is it more like is there still a hunger for startups? What are you seeing in the next year? What is happening now?
In terms of like interest in asset classes specifically,
Correct.
yeah, I would say, well, when we started, real estate was the last thing people wanted to hear of. Dubai was still coming out of quite some tough years in the market. Now it's definitely back, and um, there's more appetite towards real estate for sure. In terms of equities, I would say public equities, lots of interest, especially in US stocks that continue to remain like the number one sought after asset class. Then you have the local market that's starting to develop. So you have the government has been quite active in promoting local IPOs. So that's the trend that we expect to continue. And private markets and startups, I think, huge demand. But it's still early days. Just given the regulation is now catching up and figuring that out. So, but we do expect. I think it's a global trend where like the democratization of private markets is something that even firms like BlackRock and the big firms that are pioneering and pushing for. And the regulator is putting the guardrails to just ensure retail investor protection in more of an illiquid, higher risk asset class. So I think that's something that will be figured out, I'm sure, in the next couple of years.
Yeah. Can you tell me? This is wonderful, and understanding how fast the market has adopted uh, privates is really incredible because the U.S. is one that the allocation to private is still 2% of retail investors. It's very very little, and even though like you said, the democratization of this asset class, but still people are not they're enthusiastic, but they're not going for the fences. Like it's not like the hottest thing right now. And I find
Yeah.
it interesting because all I do is private investing, and I don't necessarily would call it more risky. I would say it is more liquid, so you need to
More
manage
liquid.
your finances better if you know what you're doing.
I'm glad
Uh,
you pointed that out because I always scratch my head where with how some regulators have been very tolerant or promoting, not promoting, but have been very okay with crypto, for example, where it's liquid but much higher risk than sometimes you can own a piece of a private company that's less risky but illiquid. And I think that trade-off, I'm glad you pointed out because I think there's something wrong there where um, then we might be there might be we might like their laws might be overly punishing and illiquid investments that could be very good or less risky and have a place in a diversified portfolio.
For sure. I think what you mentioned, it's all about appetite. It's all about people not wanting to miss out on crypto. Crypto is such a big news headline thing that if you limit people to do it, they will find ways to invest. So you had to like somehow allow people to invest, and then knowing that you can lose everything in one day, or volatility is the highest in crypto than any other asset class. But it's sort of like we also allow society to gamble, which is equally volatile. Or insurance is the same thing. If you see insurance as an asset class, it's the worst investment you can make because it's 2% of your asset going down, and unless something goes wrong, then it's the best investment you can make. So I think there's a big trade-off, and I do believe that privates have a very big portion of allocation, at least what we're seeing. I don't know if you saw the UBS Family Office report stated that in 2022, privates to traditionals was 70-30. Sorry, traditionals to private. So 70-30 traditionals, 30% private. Today, it's inverted. Oh. It's 70% private, 30% traditionals. There are many explanations to this and many presumptions that you can make that, okay, people are looking for less correlated stuff, or perhaps the market is a little bit too hot and family offices operate under different type of parameters. Like money is not what they seek. They seek to protect assets. So it's a different type of, let's say, mentality. But what are you seeing in the Middle East with people when you launch new products? Are you seeing a big shift, or what is that? How do you see it?
Yeah, I think a part of me, in a lot of ways, the US sets the trend still, especially when it comes to investing. I would say I'm not too surprised of this flip. Recently, I came across, I was talking with a colleague or a contact at Blackstone, and they were saying how it makes sense that private is taking up so much space because more than 90% of companies, I forgot what the exact threshold was, are private by. So if you're trying to own a piece of the world or the economy and only have public exposure, you're missing out on a lot of great private companies. So that was like an aha moment for me, where when you think you own the S&P or a VTI as a Vanguard that has thousands of companies, you're actually still owning a tiny percentage of American companies. So in terms of back to the MENA region, I think while the demand then is there, and especially like there's more there's a certain amount of nationalism, pride in local companies, local success stories. It's still, I think we're still not quite there in terms of how easy it is to access them. But as I said earlier, I do think they move fast. Once there is demand for something, they move very fast into establishing the rules so that it can become in market relatively soon. That's one of the strengths of the UAE specifically, is how quickly they've been able to move whenever there's either a crisis like COVID or an opportunity as well.
Yeah. I actually have the data fresh in my mind. In 1996, there used to be 8,800 companies listed on the stock exchange in the US. Today it's 4,400. So it's 50% reduction.
Wow.
There's, I believe, I might be wrong about this one, but 10-to-1 ETFs and other type of commingled funds over the asset classes. So if you think of that, it's enormous. Like the amount of ETFs that own the same stocks over and over again in different type of configurations is
right.
bigger than that. And then there's a trend of companies like SpaceX that will never go, will try to never go public because their mentality is when we go public, we lose control.
Hmm.
And obviously, it's very hard for the VCs because they're like, okay, when do we cash out? Like, this is an illiquid that I'm stuck in forever.
Hmm.
Secondary markets become maybe a little bit more interesting, but I still feel that there's a disconnect there.
Yeah, yeah, yeah. It's in the works as we're currently living the or waiting while the solution is being worked out for that supply and demand to meet each other across platforms and not just rely on traditional channels or bankers. I think there's going to be a digital solution to all of that for sure.
Yeah. Let's go back to entrepreneurship and how you started this company. Now that there's a big ecosystem in the UAE for entrepreneurship and starting and bringing founders, what has been something that you see as a big mistake that other founders are making? That you would kind of tell them like, hey, don't go that route or avoid mistakes.
I think the first thing that comes to mind is in terms of a mistake is something I believe in a lot is remote work that I've seen too many people kind of put that in the past without necessarily understanding how advantageous it can be. I've seen a lot of founders specifically, yeah, and maybe not value the amount of trust, ownership, flexibility, cost effectiveness that it can provide. I know it's still ultimately a personal preference, but I would say um, yeah, that's something that surprised me coming out of like 2022 onwards, how quickly people jump back to the old ways of doing things. That's quite that was quite an interesting trend.
I think that's super interesting point because the big companies are pushing, like US market especially, is just now they're pushing their employees to come back to work. It was work from home was sort of normalized, but you saw it opposite in the UAE, and you think even though it's normal, people are not taking as much advantage of work from home than they should.
Yeah, yeah, especially when you talk about like the insane traffic, cost of living increase, and the amount of stress that's adding and loss of productive hours and how can drain like the day in day out impact of that specifically in busy cities is pretty crazy, and the kind of retention I think you're able to achieve by offering remote and the quality of candidates that have that as an absolute criteria I think is a lot of the best candidates have that as a almost a rule that you end up not accessing some of the best talent out there, especially in the MENA region or the UAE where you're so connected to the globe and you can benefit from being a global team.
How do you see it, or how do you attract that talent? And then, do you see that when you scale, you'll have to bring people, or is this like something you're ingrained in Sarwa?
You mean how have we attracted talent?
Yeah.
I I think it's been the main channel has been referrals. Um, so publicizing a post, but and then working our network. We do have also actually. It's taken us a long time in recruiting as a tough, very sales heavy channel sometimes. But once we have found like one recruiter that has been really amazing to work with. Once he figured out the kind of culture fit and the type of candidates we look for. Um, yeah, and I think diversity, like very diverse team from multiple backgrounds, leaving like politics outside of work, having very diverse views. So, and defining also what our culture is. I think once we've defined, okay, we want people that are positive, have a lot of ownership, value simplicity, um, um, showcase trust in their work, then it becomes quite natural to spot that and then the word gets around, I think, around the kind of culture you have and through the process that shines through. So So no, I haven't found it particularly challenging today. I think earlier on it was more challenging, especially when we weren't remote, to convince. It was a big, not just a new job, but a big life decision to bring people to the UAE. When today, funny enough, people are choosing to come without us imposing that because um, of a personal choice, that if, in case that aligns with their interest. So the destination of UAE became more attractive in general. And on top of that, now that we're remote and we're not, um, it just enabled a whole other, yeah, a lot more candidates in Europe and North America beyond just the MENA region.
Sure. And you mentioned something interesting about culture. How do you work culture when you have a remote team in different places? This is something that I definitely struggle with, and I think that hearing your point of view is very valuable.
Yeah, I think, a business idol of mine is David Heinemeier Hansen, DHH, from um, the company called 37 Signals as an agency. And he's written with his co-founder a book called Remote that offers very actionable insights on how to do that. One of the things that resonates with us is I think the type of people is a long way. So the people that do really well are people that have already experience um, and and are very autonomous and good at manage. They don't need to be managed. I think being self-managed leads to a very good remote culture where things get done just from the sheer amount of ownership people are driving and that clarity that they have in terms of their roles. So I think the clarity over your role, over what you're driving, the focus of the business is very good. Meeting in person still a must, but on a more targeted, very intentional basis. So whether it's meetups, company retreats, very very important as well. So, but yeah, Slack becomes really the main tool to connect the whole company.
Sure. And I love that traditional finance used to be the nicest bank, the best corner, the beautiful build outs. And then fintech takes it completely the opposite side and says, we don't need this huge expense. We can't attract talent, the best talent, because we would be limited to the people that live close to this location.
Yeah.
And then you're doing something revolutionary, which is getting people from different parts to work together to serve the MENA region, which is pretty interesting. It's a very different value proposition, and then you're successful doing it.
It's a new form of luxury. Before the luxury was having a corner office, a driver, and all of these things in terms of the corporate world. Today, the luxury is being in charge of being trusted with your own time and where to work out of, so that um, yeah, that's been a big shift in what's the most valuable in terms of what employees and even founders what they value.
I'm going to quote you on this one. It's like trusted with your own time. I think it's very, very valuable. Let's shift the gears to investing. What is your philosophy? How do you see investing? What do you do for yourself?
It's changed over the years. I started initially as like a pure passive investor where majority in index funds and predominantly equities given my risk appetite and age. With time, I started to have an itch for more active bets, um, and so it's still predominantly passive, but added a few specific companies, public and private, to that I wanted to that I believe in, and then more recently I've been geeking out on Nassim Taleb's books and the effectively risk mitigating against black swans, and now we're working on something actually quite cool to also add hedging in a meaningful way especially after the performance of bonds in the recent years that threw me off a lot about their limitations and their role in a portfolio. So, so yeah, overall at the core, if I were to summarize it, very passive in general, with a very few selective bets, and r when it comes to hedging, ensuring that the portfolio can withstand big shocks and not have to wait too long to recover from them.
Would you say this is interesting because would you say that your risk appetite is a little bit lower than your entrepreneurial appetite?
Yes, that's an accurate. Yeah, exactly. It's so we were entrepreneurs were so risk on in at in our journey or on our venture that on the other side, I think it's more balanced for sure.
Yeah, yeah. I help entrepreneurs invest, so this is a common thread that I see. And now talking to you, the other side of the world, we continue the same mentality. It's like a barbell. We go full out on something we can
That's it.
fail, but when we're talking about what we've already made, we're more passive. We continue to allocate more broadly, and then
Yeah.
selective bets and things that we want to participate in. You mentioned something that you said that you believe in, but is it really belief, or do you do like due diligence, or is it like opportunistic things that present to you? How do you see opportunities like those onesie twosies that you said that kind of don't fall into a broad spectrum ETF?
Yeah, I think it's more opportunistic or light touch analysis. Gravitates a lot in terms of fintech. So, and certain themes that I'm excited about, like open banking or even investment platforms in other markets. So that's not just about the MENA region as well, just having exposure to what's happening also in the US. Yeah, yeah, I would say definitely on the lighter side rather than like diving deep into the statements and what you would expect from people that just do this for a living.
Sure. I have a question regarding the view of the U.S. real estate from the MENA region.
Hmm.
How do you perceive that sentiment? I think, or at least I'll tell you what I feel and what I see, and then I'd like your point of view because it's going to be more accurate. But I feel it's very politically driven, and it's usually sort of like Dubai right now is booming, so sort of a myopic view of why invest so far away when right here we can make good returns. But it's also like politically driven a little, like, oh, if I do like the politics, I will go there, but if I don't like the politics, I'm gonna wait. How do you see it?
Yeah, no, I think that's a fair representation. There is this home advantage of that asset class, for better or for worse. I think that for better it means okay, you might understand it more or get more details. For worse is you're doubling down and as opposed to reducing or diversifying your exposure, especially in real estate and especially in MENA, where we've been reminded not too long ago that it can take a serious beating. So that being said, we do have a 5% allocation to US real estate in our portfolio, and that's been a well-performing, very welcomed addition to it. It's a Vanguard ETF called VNQ. That in general people like knowing. Okay, even in a stock ETF portfolio, I have exposure to it. So I can't remember one pushback from a client around it. On the contrary, so when it's kind of packaged, presented well, I think it's welcome. But the you're spot on, and you'll go with what you're hearing about more, and what's being more presented to you is the local offering.
Sure. And then another question that I have is I went to Abu Dhabi Finance Week last year,
Nice.
and it was incredible. Like it's first time that
Yeah.
I've been to the UAE. It's breathtaking for a start. It's grown in 52 years. Like it was like 52-year uh, history. They've done like incredible stuff. But something that I noticed from Abu Dhabi Finance Week is the amount of people going to the UAE to ask for money is insane. It's like there was people that I spoke to that were like, yeah, you and your mother and your grandfather, everybody's here. Like it's how do people differentiate themselves, or how has that sentiment been that they're they were the bigger winners of COVID or post-COVID because of the oil energy crisis, and oil was high and the rest of the world was crumbling, and you have high inflation in the U.S. So the MENA region was really a winner in that time, but then that caused a flock of people going there. What do you see as common mistakes that people do when they go there trying to ask for money?
Yeah, it's a good one. We have both Mubadala and ADQ on our cap table, so there are two of the biggest the biggest two sovereign wealth funds, I think, or I might be missing one, but I think when I meet with them, one thing that stood out from my discussions is they've become very quick at identifying um, who's there and committing to actually developing the ecosystem versus who's kind of just there as more of a tourist or more just to raise money and deploy that elsewhere. So yeah, despite the huge demand, it kind of tells you how it's been a tough journey for funds specifically to raise. And I was also surprised by the amount of funds and the type of funds, some big names as well that you would think um, they have unlimited capital. Um, so 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 I so I think the common mistakes is expecting a good outcome without an operational or a serious link to the country.
Yeah, yeah. And I like how you mentioned tourists, because that's like a common word for people that we use that enter the U.S. real estate market thinking like, oh, I'll just buy a condo and it'll do well. It's like,
Yeah,
you're competing in the NBA. If you're not the best, they're gonna eat you up. Like it's just
yeah,
not gonna work. And I like what you just mentioned. Like there is, if you truly want to build foundational, if you truly want to do something a little bit more than just passing through because it's where there's money. So it's sort of like if you cannot withstand the bad time, you shouldn't be here in the good times. Like it'll be harder
yeah,
to get.
yeah. Unless I had a strong link to the UAE, I honestly would really disagree with that strategy. It's the wrong one, especially with, you were saying how only 2% of capital is allocated. I think that number is definitely lower in the UAE. So it's an emerging asset class. Venture is still it's it's buzzing, but it's still very, very early days. And I think they're extremely selective. So and the type of investors that they wanted to access to without any UAE present, they would have tapped that connection even before all of this flood as well. So I would say it's just it's a very crowded way of not to discourage not to discourage anyone, but I just wouldn't go out of my way unless I had a proper either organic expansion or M&A plans to do business there.
Yeah, yeah. No, I don't think it's discouraging. I think it's a reality check, because I think that many people think, oh, I'm going to just fly over.
Yeah,
I'm going to come back with millions, and that doesn't really happen. And they're like, oh, but they don't understand, or they don't. But it's really, they are catered with so much and flooded with so much. And if you're just
yeah,
one more, you're just noise. You're not really there to build that connection.
yeah, exactly.
Let's talk more about your company. Where do you see this going in the future? What are you the most excited about that you're working on right now?
Yeah, I'm very excited about so private markets is an area that we're excited that we discuss and how that's going to shape as well. We're excited about just more tools in the active investing space. So we're seeing a lot more pull in and demand for better tools, more insights, around how people can take control of investing on their own and not just rely on an advisor or a managed portfolio. Um, we recently reached profitability this year, so that's been a mindset shift as well, where
Congrats.
it's allowing us to invest. Thank you. It's been allowing us to invest a lot more into not just projects, but also accelerating like the movement of funds so that clients have a better, faster experience moving money from UAE to the US to Europe. So yeah, I think if I summarize it, it's continuing to double down on active investing tools, speed, and new asset classes. I think it's really key. Similar to the UBS study that you mentioned, there's a Goldman one that looks at the portfolio mix of family offices, and you realize we're still a long way to go so that the call it the mass affluent or the affluent investor has access to the same portfolio that's predominantly the biggest asset class is alternatives more than public equity. So today, I think it's still the other way around for the majority of people that are just starting or have started to have public equity exposure. So very excited to realize that it's still very early days in investing, and how in the US, where it might have reached more than 60% of people owning stocks, in the UAE, I think we're still in the single digits, and people are still waking up to the potential of investing and how wealth creation happens more through invest owning assets rather than your income. So I think realizing how early we are and that we're one of the players there that's moving the needle is something that drives us.
For sure. Super, super, super exciting. And what an opportunity. I would like to finish the podcast by asking you what inspires you in the work that you're doing today.
What inspires me, I think, that's a deep question. I think seeing results has been very inspiring lately. We're 7 years in, and um, I think a lot of entrepreneurs don't realize, think it's going to be a much shorter or quicker journey. And I've shifted my time horizon to still deliver and have aggressive milestones while being more patient and seeing results. And I think we're starting to see more people creating wealth, more people being happy about investing with us, staying with us over multiple years, and they're seeing, okay, wow, this works. Um, there's an engine working for them in the background without them just having to work. And I think that brings a lot of inspiration to see results across both clients and the business as well.
I love the answer. I'm a very results-oriented person, and I also think it's very wise what you just mentioned, that it takes a lot longer than anybody thinks. It's a lot harder than anybody thinks. And someone who's successful got to profitability in year 7. So I think I'll reiterate, like I did take a few notes of what you wrote, is what you said, trusting with your own time, and now this one, which is, it's going to take longer, be aggressive with your milestones, but then also be patient to get them. So
Yeah.
I really, really enjoyed this conversation, Mark. Thank you again for coming. I'd love to have you back in a few years and see your journey. But let's stay in touch, and thank you again for coming.
Thanks, Ahmad. Really loved our chat, and definitely looking forward to staying in touch.
Fantastic. Thank you.
Thank you.